OG Pips over here at Creative Charts. And I just wanted to show you how I look at the charts. A little daily breakdown for me on President's Day, February 22nd. Using my icy hot color theme. The blue up candles, the red down candles, with the nice white bluish hue background. Looks real clean. I can see everything beautifully with this color theme. So yesterday on Sunday when the market opened, I seen Chief perform this huge wick out of this candle I was looking to get an entry in. Even though I wasn't able to capitalize fully on the entry down there, I was able to get a buy-in somewhere around this area right here off of, I'm pretty sure, this little wick right there. And I wrote it to my TP above this wick right here. So that was a nice profit. Secured the bag on that one. As soon as I got out, what do you think I did? Obviously wanted to get right back in another one. FOMO, fear of missing out, right? Not a good thing to have, but you need to be honest with yourself in every trading decision you do. So that's why I'm showing you this video and how you can kind of counteract yourself. You know, try to beat your own mind when your mind's playing tricks on you. So knowing I had this urge of I needed to get into the market, which I've been working on a lot, I seen price was starting to have some bearish implications, some bearish reactions, heading up towards this hourly bankers candle. And this was right around 10 a.m., 11 a.m., where it was very common to see opposite reactions at those times after your first initial New York Open push. So that was one of my confluences of actually trying to get a sell-in off of this 1 hour candle. But knowing that this was the first touch of the candle, knowing that's a higher risk trade setup, and knowing that Chief is stuck in this range of high resistance and low support, the price is sideways, right? You don't really want to be trading in a sideways market. That's fact. And I also know that on the higher time frames, there's liquidity to the above. There's equals. And you probably know the theory, trade towards the money, baby. So it's something you definitely need to be wary of. But from these equals is the first wick right here. That push up was created from this. So here was your structure. The second wick of the equals pushed down to actually break the structure. So that gave this last candle power for people, for sellers and bears to get their money out of. We had this first huge reaction out of. Now when its price moonshotted back up into it and fell, this was a minor structure zone where this impulse failed to break. And then the impulse above failed to break. And then the push down failed to break. So this push up is a good possibility it could fail to break because we are stuck in this range. Because you have your major structure points here and here. Well, these are minor structure points here and there and there. Oops. So as we go back to the 1 hour, the confluences for me taking that trade was what I just showed you right there, was this break of structure and the push back up and this reaction out of it. And then the double mitigation, which I like to call it, out of the initial bankers candle. So here was the initial bankers candle where you had your first mitigation from it. And as price returns into it, I consider this the second mitigation. So it gave us a little confluence, and you had your minor micro break of structure right here. So your push up, which broke structure, but actually performed a stop hunt, a liquidity grab, and they fell to steal these lows and create lower lows. So on the push up, back to mitigate out of this candle, there was a decent possibility to get that downside reaction that we're looking for, that bearish pressure. But knowing we're in this range and all these things are going against us, this is not a low risk setup. This is a high risk setup. So we don't want to go putting the house on this. And you never want to go put the house on anything, right? So the risk on this is very small. It is very little. And since I've already made a bag on the day before, I just made a little bag, so I'm able to adjust my risk accordingly with proper risk management, which is honestly the most important thing on the side of psychology, followed by your strategy and your fundamental analysis. Because the fundamentals and the technicals, yes, they do vary, but they're not as volatile as the emotions of this. And if you don't know what you're doing, the risk management of this. Okay? Those things you need to get under wraps as quickly as possible after you've learned the technical and fundamental side. You need to take control of your emotions and take control of your risk management, because that is what will propel you into the future with future gains and not future losses. Alright, so that's just something quick I wanted to show you guys how I look at the charts, a daily markup, and using one of my color schemes. Call this one Icy Hot. I actually came out with one I call Irish Springs, which has a nice Conor McGregor vibe to it. You've got the green and the oranges, the nice background. Still clean. Everything's still easily identifiable, your zones. I like it. I like it.